Welcome to the deep dive. Today we're not just talking about clicking buy now, we're really going deep. A full exploration of Amazon as it stands, well, right now, April 2025.
That's right. The goal here is to really get under the hood of this giant. Look at its core business, financials, competition, risks, even market value.
Consider this your shortcut, yeah. A full 360-degree view of Amazon.
And we've pulled from a lot of sources to build this picture. Amazon's own filings, the 10K, 10Qs, investor calls, proxy statements, all that.
Official stuff.
Exactly. But also layered in insights from reputable financial news, industry reports, market data, focusing mainly on the last, say, 3 to 5 years.
But with a closer look at recent valuation and sentiment, right, the last 6 months or so.
Precisely. Need that up-to-date perspective.
Okay, so think of us as your guides through all this info. Let's start with the big question. Beyond my shopping cart, what actually is Amazon's core business? How does it make all that money?
Well, officially, their mission statement talks about being Earth's most customer-centric company, which for shoppers like us means focusing on selection, price, and convenience.
The holy trinity of Amazon.
Pretty much. They're essentially solving the problem of, fragmented retail, making shopping way more efficient, no more driving store to store.
Right, that classic one-stop shop idea, but like on steroids.
Exactly. And then for sellers, the businesses listing products, Amazon gives them this huge customer base and, critically, their logistics network. Warehousing, delivery, the works.
Okay, so consumers, sellers, what else?
Then there's the whole other side. Amazon Web Services, AWS. That's about providing scalable cloud computing infrastructure for other businesses, tackling their IT challenges.
So it's really not just about individual shoppers then. Who exactly are all these different customer groups?
It's a really diverse mix. You've got consumers, obviously, then the third-party sellers we mentioned, developers building things on AWS, big companies, enterprises running their whole infrastructure on it. Plus content creators, video, music, using their platforms. And increasingly, advertisers are a huge customer group trying to reach all those eyeballs.
Right, the ads seem to be everywhere now. So how does this all add up to revenue? Where's the cash actually coming from?
It breaks down into a few key streams. First, direct sales stuff Amazon sells itself online or in physical stores like Whole Foods.
Okay, the retail party.
Yep. Second, those fees from third-party sellers. Commissions, fulfillment fees if they use FBA, stuff like that. Very important.
FBA being fulfillment by Amazon.
Correct. Third, subscriptions, mainly Amazon Prime. That's big recurring revenue. People pay for the shipping, the streaming.
The whole package.
The whole package. Fourth, AWS usage fees. Businesses pay for the cloud services they consume, compute power, storage, you name it. Pay as you go, mostly.
Makes sense.
And finally, advertising. As you said, it's booming. Sponsored products, display ads. It's a really significant, fast-growing piece now.
Okay, so that's the mission, the revenue streams. How does Amazon actually report this? How do they break down the business segments in their financials?
They report across 3 main segments: North America, International, and AWS Amazon Web Services.
Simple enough.
And within those segments, you see revenue from all the sources we just talked about. Online stores, physical stores, seller services, subscriptions, ads, and of course, AWS cloud services.
Could we put some numbers on that for, say, the last full fiscal year, 2024? How did it split?
Sure. For 2024, North America was the biggest chunk, about $387 billion. That's roughly 61% of the total revenue.
Still the core then.
Definitely. International brought in around $143 billion, so about 22%. And AWS contributed roughly $108 billion, making up almost 17% of the total.
Okay, 17% for AWS. Has that mix been changing much over time? Is North America shrinking relatively?
That's a good question. The North America and international shares have been, pretty stable, actually, around 61% and 23% respectively for a few years.
Huh.
The real story is AWS. Its share keeps ticking up. Back in 2022, it was maybe 15.6%. Now, like we said, nearly 17% in 2024.
So while retail is still the bulk of the revenue, AWS is becoming a bigger and bigger engine for growth.
Exactly. It shows just how important the cloud business has become to the overall company.
And advertising. You mentioned it's growing fast. Where does that fit in the segments? How big is it really?
Yeah, it's embedded within those North America and international segments, not broken out separately in the main reporting. but it's a monster. By the end of 2024, it hit an annual run rate of about $69 billion.
69 billion run rate. Wow. So nearly as big as the entire international segment almost.
Getting there, yeah. It's a huge growth driver for them, no question.
And what about the third-party sellers? How much of the stuff sold on Amazon actually comes from them?
It's massive. In the last year, something like 61% of all physical units sold on Amazon came from those independent sellers.
61%. So most items aren't even sold by Amazon itself.
Correct. It really shows how vital that marketplace model is. They're the platform connecting buyers and sellers.
Okay, got the revenue side. Let's flip it. Where does all that money go? What are the big cost buckets for Amazon?
The biggest single category is cost of sales. That's the direct cost of the products they sell themselves, buying the goods, shipping them, digital content costs. That was about 51% of revenue in 2024.
So half the money goes right back out the door for the stuff they sell.
Pretty much. Next up is fulfillment. That's running the warehouses, customer service, payment processing. That took up around 15% of revenue.
15% just on logistics and service. That scale must be incredible.
Oh, absolutely colossal. Then you have technology and infrastructure. That's R&D, the huge AWS data centers keeping the websites and apps running. About 14% of revenue.
Still a huge chunk for tech.
Definitely. After that, sales and marketing is around 7%, and then general and administrative G&A is actually quite small, less than 2% of revenue.
Interesting. So looking at those costs, any major trends lately? Have they been getting more efficient?
Yes, 2024 looked like a year of significant improvement there. Cost of sales as a percentage of revenue actually came down noticeably. It was over 56% in 2022, down to 51% in 2024.
So better sourcing or maybe selling higher margin stuff?
Could be a mix of both.
Yeah.
And fulfillment costs also dropped as a percentage of revenue. Suggests they're getting better at running those massive logistics operations, more efficient.
Even with rising wages and fuel costs. That's impressive.
It seems so. Even tech and infrastructure spending, while still huge in dollar terms because of AI and cloud investments, dipped slightly as a share of revenue.
So the overall picture is better cost discipline, better efficiency in 2024.
That's what the numbers suggest, yeah. A real focus on operations.
Okay, so revenue in, cost managed. What actually drives the profit at the end of the day? How do they make money?
Several key things. First, scale. Just being massive lowers their per unit costs everywhere, from buying goods to delivering them.
Economy of scale. Classic.
Exactly. Second, operational efficiency. They're constantly optimizing fulfillment with robots, data, making AWS data centers cheaper to run.
Constant tweaking.
Always. Third, and this is crucial, the high margin businesses. AWS and advertising just make way more profit per dollar of revenue than retail does. So their growth disproportionately boosts the bottom line.
Right, that mix shift is key.
Very key. Then third-party seller services are also high margin. They're leveraging infrastructure they already built.
Makes sense.
And finally, Prime. It's recurring revenue, yes, but it also locks customers in, makes them spend more across the board. Loyalty.
Let's talk pricing. We always hear everyday low prices.
Yeah.
How does that work in practice, especially versus competitors?
That's their core principle, yeah. Attract customers with low prices, often aiming to be a bit cheaper than, say, Walmart for the same item online.
Prime adds to that value, right, with the shipping and streaming.
Absolutely. It bundles value-free, fast shipping is huge, plus the video, music, makes the overall proposition attractive, especially if you order a lot.
And for AWS, how do they price that?
It's mainly pay-as-you-go. You pay for what you use, compute, storage, etc. Plus, they offer discounts if you commit to using a certain amount over like 1 or 3 years.
Flexible, but rewards commitment.
Right. And advertising is mostly pay-per-click. Advertisers bid and pay when someone clicks their ad.
Okay, so when people actually compare prices, does Amazon usually come out cheaper?
Studies often show Amazon is slightly cheaper online than competitors like Walmart, especially for things like electronics. They also seem to run sales more often.
And in the cloud, AWS versus Azure or Google Cloud?
It's super competitive there. AWS pricing is generally seen as competitive, but Microsoft Azure and Google Cloud, GCP, have their own strengths and discount structures.
It depends on what you need.
Exactly. Azure might be cheaper if you're already a big Microsoft shop. Google might have deals on certain types of computing. AWS has things like savings plans and spot instances for discounts too. It's complex.
Okay, clear. So we've got revenue, cost, pricing. Let's hit the bottom line. How has Amazon's financial performance actually been lately? Growth, profits.
Performance has been, well, pretty strong recently. Especially 2024 showed a big rebound after a tougher 2022 when the economy slowed.
Okay, so recovery.
Big time recovery. Overall revenue grew about 11% in 2024, which is solid for a company that big. But the profit story was even better.
How so?
Operating income surged, really by about 86% in 2024. Net income also swung way up, and they generated a lot more cash. Operating cash flow was up over 36%.
Wow, 86% operating income growth. How did they manage that?
It really comes down to margins improving dramatically. Gross margin went from under 44% in 2022 to almost 49% in 2024.
So keeping more of every dollar after paying for the goods.
Exactly. And operating margin, after all, operating costs went from a pretty slim 2.4% in 2022 to a much healthier 10.8% in 2024. Net profit margin recovered strongly too.
So those cost cuts and efficiencies plus the growth in AWS and ads really paid off.
Clearly, it shows the leverage in their model when things click.
How does that 10.8% operating margin compare, say, to other big tech or big retail?
It's interesting. Compared to like Microsoft or Google or Meta, whose margins can be way up in the 30s or even 40s.
Right, software and ads are usually higher margin.
Exactly. Amazon's big retail piece pulls their overall margin down, but compare them to traditional retail like Walmart, which is maybe around 4% operating margin.
And 10.8% looks pretty darn good.
Looks very strong, especially the improvement they showed in 2024. It highlights that shift towards higher margin segments and better efficiency.
Okay, so the income statement looks healthy. What about the balance sheet? Financial stability, debt levels?
Balance sheet looked robust at the end of 2024 and definitely improved. Total assets were around $450 billion.
Huge.
Huge. And they had a really strong cash position, about $79 billion in cash and equivalents. Lots of flexibility there.
Did assets grow? What about investments?
Yeah, we saw an increase in property and equipment. That reflects all the spending on AWS data centers and also the fulfillment network. They keep investing heavily.
Makes sense.
Interestingly, long-term debt actually decreased slightly, down to about $53 billion, and total equity surged thanks to those strong profits flowing through.
So less debt, more equity. Sounds healthier. What about liquidity? Ability to pay bills?
Liquidity looks decent. Their current ratio improved a bit to 1.06x. Basically means short-term assets cover short-term liabilities, and that big cash pile helps a lot.
And leverage. Debt relative to equity.
Significantly reduced. The debt-to-equity ratio came down quite a bit, which is generally seen as a good sign. Less risky financing structure.
Any key pressure points on the balance sheet we should watch?
The main one is just the continued need for heavy capital expenditure, or CapEx, building data centers for AWS, expanding logistics, funding new bets like Kuiper that takes billions every year. It's crucial for growth, but it's a constant drain on cash flow.
Always needing to feed the beast, basically.
Pretty much. It's the cost of staying ahead.
Okay. Financially strong, but capital intensive. Let's zoom out again. Competition. Where are the main battlegrounds for Amazon?
They fight in several massive, tough markets. First, obviously, e-commerce, global market, trillions of dollars. Competitors are everywhere. Alibaba internationally, Walmart, Target domestically, lots of others.
The original battleground.
Yep. Second, cloud infrastructure, PaaS. That's growing super fast. It's mainly the big three, AWS, Microsoft Azure, Google Cloud. Fierce fight.
The profit engine battleground.
You got it. Third, digital advertising, another huge market. Google and Meta dominate, but Amazon's now a strong number 3 and growing faster than them.
So retail, cloud, ads, where do they actually rank in those markets?
In U.S. e-commerce, they're the clear leader, around 38% market share, maybe heading over 40%. Globally, they're the biggest outside China.
Still dominant in their home turf.
Very much so. In cloud, AWS is still the global leader. Market share estimated somewhere between 30% and 33%, ahead of Azure and GCP.
Maintaining that lead?
For now, yes. And in digital ads, they're number 3 globally, behind Google and Meta, but gaining ground quickly. Fastest growth of the top 3, usually.
Okay, can you name some specific competitors they worry about in each area?
Sure. E-commerce, Walmart, Target, definitely. Alibaba internationally, JD.com in China. eBay still exists. Costco, even Apple selling direct. And newer players like Shein, Temu shaking things up.
Lots of angles there.
Cloud is mainly Microsoft Azure, Google Cloud Platform, but also Alibaba Cloud is big, Oracle is trying hard, IBM Cloud.
The usual suspects, ads.
Ads is primarily Google and Meta, but also TikTok is becoming a bigger competitor, especially for younger eyeballs. And don't forget they compete in streaming video with Netflix, Disney+, music with Spotify, Apple Music, even delivery with FedEx, UPS as they build their own network.
Wow, they really compete almost everywhere.
Yeah.
So with all that competition, What makes Amazon stand out? Why do people choose them?
Several key things. One is just the sheer vast selection, millions of items from Amazon and third parties.
Yeah,
Hard to
the
beat.
everything store concept.
Exactly. Then the Prime ecosystem, that loyalty loop, fast shipping, video, music, it's incredibly sticky. People get used to it.
Hard to leave once you're in.
Very. Their logistics infrastructure is a massive advantage, getting stuff to you that fast, reliably. It's complex and expensive to replicate.
Right.
For AWS, it's technological leadership. They offer a huge range of services, generally seen as reliable, scalable. Plus, they're building their own chips now, like Graviton, Trainium, which can give performance or cost benefits.
The custom silicon edge.
Potentially, yeah. Their data and AI capabilities are another differentiator. Personalization, targeted ads, powering things like SageMaker and Bedrock for AI development.
Using all that data.
And finally, that famous customer obsession culture. Even if it gets criticized sometimes, historically it's driven a lot of their innovation and focus on user experience.
You mentioned economic moats earlier. Can you break that down for Amazon? What protects their business?
Yeah, an economic moat is just a sustainable competitive advantage, something that protects profits from competitors long term, like a castle moat. Morningstar gives Amazon a wide moat rating, meaning they think the advantages are significant and durable.
Okay, so what are those specific moats for Amazon?
Several strong ones. Brand strength is huge. Amazon is a household name, trusted globally for convenience, value. Prime reinforces that constantly.
Right.
Proprietary technology from all that R&D spending, especially in AWS, AI, logistics, hard to copy.
Okay.
Network effects. The marketplace gets better for buyers as more sellers join and vice versa. Same for AWS, more users attract more developers and tools, making it stronger. It's a virtuous cycle.
The platform gets stronger as it gets bigger.
Exactly. Switching costs. For Prime members, losing the benefits is a pain. For sellers using FBA or businesses built on AWS, moving is really complex and expensive. They're locked in to some extent.
Inertia is powerful.
Very. And finally, cost advantages from their massive scale and efficiency lets them price lower or invest more than smaller players.
Okay, that paints a picture of a very well-defended business. But looking forward, what big trends could really impact Amazon?
3 major ones stand out. First, the rise of AI. This is a massive opportunity and a challenge. It's boosting AWS demand. Hugely, companies need the cloud power for AI.
Right, training those models takes serious compute.
Exactly. And AI can improve their own retail, logistics, ads, but it requires colossal investment, and they're in a fierce race with Microsoft and Google, who are also betting big on AI.
So huge potential upside, but also huge competition and cost. What's number 2?
Second is omnichannel retail integration. Customers want seamless online and offline experiences now. Click and collect, easy returns in stores, etc.
Like what Target and Walmart are doing well.
Precisely. Amazon has Whole Foods and Amazon Go, but they're way behind traditional retailers in leveraging physical stores for online orders. They need to keep improving delivery speed and find ways to bridge that online-offline gap better.
A potential weakness compared to those guys. What's the third big trend?
Third, and maybe the biggest cloud hanging over them, is increased regulatory scrutiny. Governments everywhere, US, EU, elsewhere, are targeting big tech's market power, data practices, AI development.
The antitrust focus.
Yeah. The FTC lawsuit here in the US, the EU's Digital Markets Act, these could force major changes to how Amazon operates its marketplace, Prime, how it uses data, that could really hit their business model and profitability. It's a major headwind.
That regulatory piece sounds serious. Let's shift to leadership. Andy Jassy's been CEO since mid-2021. How's he doing? What's the assessment?
Jassy's an Amazon lifer, joined way back in '97. Crucially, he built AWS from the ground up. So he has immense tech credibility.
Knows the profit engine inside out.
Definitely. Since taking over from Bezos, he's overseen this period of cost-cutting after the pandemic boom, which clearly helped those recent profit numbers. He talks a lot about AI investment, pushing for more speed, trying to make Amazon feel scrappy again despite its size.
Try to fight bureaucracy?
Seems to be the goal. His style seems pretty direct, focused on strategy and operations, and his pay is heavily tied to long-term stock performance, so his interests are aligned with shareholders.
What about the rest of the leadership team? Stable, experienced?
Mostly, yes. A lot of long-timers. CFO Brian Olszewski's been there since 2015, lots of continuity. Doug Harrington, running worldwide stores, is credited with some recent efficiency gains.
Good.
There was a change at AWS recently. Matthew Garman took over as CEO from Adam Selipsky. But Garman is also an AWS veteran, so likely more continuity there. David Zapolsky handling legal and policy is obviously key with all the regulatory heat.
Right, busy guy.
You bet. And Bezos is still executive chair, so still involved strategically. Overall, it's a seasoned team, deep institutional knowledge.
Let's talk governance. How is the company run at the top? Board independence, executive pay, shareholder rights.
Pretty standard structure for a big U.S. company. 12 directors on the board, 10 of them are independent. That's a good ratio, suggests decent oversight.
Board, not just rubber stamping management.
Hopefully not. They have annual elections for all directors, which increases accountability. Some diversity on the board. There's a lead independent director, Jamie Gorelick, to help the board function independently, and the usual committees: audit, compensation, governance, security.
What about how they pay the top brass? You mentioned Jassie's stock alignment.
Yeah, Amazon's philosophy here is pretty unique. Very low base salaries for top execs compared to peers. The vast majority of their pay comes from restricted stock units, RSUs, that vest over many years, like 5+.
No big annual cash bonuses?
Nope. No annual cash bonuses for the senior team. The idea is extreme long-term alignment. If the stock does well over years, they get rich. If not, their pay is relatively modest.
Forces them to think long-term.
That's the rationale. They also don't tend to give lavish perks beyond necessary security.
And shareholder rights. Does the average investor have much say?
Standard setup. One share, one vote. They have majority voting for directors in uncontested elections, meaning a director needs more for than against votes to get elected. Pretty typical rights.
Okay, structure and governance seems standard if leaning towards long-term incentives. What about culture? That's always a hot topic with Amazon.
Officially, it's all built around the famous leadership principles: customer obsession, ownership, invent and simplify, frugality, all those. Jassie's also pushing this why culture, digging deep, questioning assumptions, trying to keep that startup feel.
The official story. What's the reality on the ground?
Well, Amazon has always had a reputation for being intense, high pressure, and despite Jassy wanting to fight bureaucracy, you still hear complaints about it slowing things down.
And the big elephant in the room? Return to office.
Yeah, the mandatory 5-day return to office, RTO, policy that started fully in January 2025, that caused a huge backlash. Lots of reports of employee dissatisfaction, people considering leaving, even logistical issues like not enough desk space.
So a real disconnect between leadership goals and employee preference there.
Seems like it. Raises concerns about retaining talent, especially tech talent, who might have more flexible options elsewhere.
What about the warehouses? Union efforts seem to be gaining steam.
That's another key tension point. The Amazon Labor Union, ALU, notably affiliated with the powerful Teamsters Union now. That gives them way more resources and leverage.
Teamsters is a big deal.
Huge deal. We saw reports of strikes around the holidays last year. Amazon historically fights unionization hard, and that continues. Plus, ongoing concerns about working conditions in some fulfillment centers persist.
So a mix of ambitious principles and some significant internal friction. How does this all play out in recent news and market sentiment? What's the buzz?
It's definitely a mixed bag. On the plus side, those strong Q4 2024 earnings really boosted sentiment. Revenue beat, operating income beat, margin expansion. Wall Street loved that.
Money talks.
It does. Also, positive buzz around AWS momentum, especially driven by AI demand. They're highlighting their custom chips like Trainium, their AI models like Nova, trying to show leadership there.
Okay.
Continued talk of improving retail efficiency, delivery speed, progress on Project Kuiper, the satellite internet thing, though there were some testing delays. And they still pop up on some best employer lists despite the RTO noise.
Okay, so strong financials, AI promise. What's on the negative side of the ledger?
The big ones are the ongoing regulatory battles. That FTC antitrust suit is a major dark cloud, plus dealing with the EU's Digital Markets Act. That stuff stays in the headlines.
The regulatory overhang.
Exactly. Then the RTO backlash gets a lot of press, raising those talent retention questions. The labor unionization threat is growing, especially with the Teamsters involved, plus those strikes. That worries investors about costs and disruption.
Makes sense.
We've also seen some smaller targeted layoffs continuing in areas like communications, marketing, signals ongoing cost awareness, maybe. And then that weird wrinkle to speculation about Amazon potentially bidding for TikTok if it faces a U.S. ban. That raised some eyebrows, questions about strategy.
Yeah, that seemed out of left field. So putting it all together, what's the verdict from Wall Street analysts? Buy, sell, hold.
Overwhelmingly positive, actually, especially after those Q4 earnings. The consensus rating among 46 analysts is strong buy.
Strong buy, despite the risks.
Seems so. The average price target is around $262, which is, quite a bit higher than where it's trading now, around $185.
Significant implied upside.
Yeah, though the range is wide, some targets are $200, some over $300. Morningstar raised their fair value estimate to $240 after earnings, but called it fairly valued then. So the market consensus seems to think it's worth somewhere in the maybe $235 to $275 range, suggesting it might be undervalued now.
What's driving that optimism then? Why are they overlooking the regulatory clouds and RTO issues for now?
It really seems focused on the financial recovery, the profit surge, the margin expansion, plus the continued growth in AWS and advertising as high-margin engines, and the massive potential of AI is a huge factor.
So fundamentals and future growth outweighing current risks in their view.
For now, it appears that way. The strong earnings beats have definitely helped build that confidence. They're betting Amazon can execute through the challenges.
Okay, that sets us up perfectly to really dig into those risks because it feels like there's a bit of a disconnect there. What could actually go wrong?
Absolutely need that balanced view. The risks are broad. You've got market industry risks, intense competition everywhere, fast tech changes like AI, shifting consumer tastes, economic downturn.
It's dangerous stuff for any big company.
Right. Then operational risks. Managing that huge logistics and cloud infrastructure, system outages, security breaches, supply chain chaos, relying on millions of third-party sellers.
The complexity risk.
Exactly. Financial risks. Results fluctuating, currency swings, payment issues, acquisitions not working out, managing that huge capex, international tax complexity.
Okay.
Regulatory legal. This is huge right now. Antitrust, consumer protection, data privacy like GDPR, labor laws, environmental rules, IP fights. The FTC suit and DMA are prime examples.
The big one.
Strategic risks, executing on new bets like AI, Kuiper, healthcare, integrating acquisitions, just managing the sheer scale and diversity of the
Pellet
plate.
spinning.
And finally, human capital ESG. Attracting and retaining talent, especially with RTO backlash, managing culture, labor relations, unionization threat, workplace safety, reputational damage from any of these.
Wow, that's a lot of potential pitfalls. Which ones feel like the biggest, most immediate threats right now?
If I had to really zero in, I'd highlight a few. The competitive intensity is just relentless. Retailers improving online, Azure GCP growing fast in cloud and AI, Google Meta and ads, new players like Shine Temu.
Constant pressure.
Always. Then the pace of tech disruption, especially AI, it's an opportunity, yes, but a competitor making a huge leap could force costly catch-up.
The fear of falling behind.
Definitely. But I think the regulatory and political landscape is maybe the most significant immediate threat.
Yeah.
The FTC suit, the EU's DMA, these could force fundamental, costly changes to the marketplace, prime data use. It's not just fines, it's the core business model potentially being altered.
That sounds existential.
It could be structurally significant. Then, a major macroeconomic downturn could hit retail spending hard and maybe slow cloud adoption, too. And the growing labor movement, especially with Teamsters involved now, poses a real risk of higher costs and operational disruption in logistics. The RTO fallout ties into this, too. Losing talent hurts innovation.
Okay, if you had to force rank, say, the top 3 or 4 risks investors need to watch closest right now.
Okay, top threats right now, I'd say. 1. Regulatory action, antitrust, and DMA. Highest potential impact on core models like Marketplace and Prime. Could force structural changes. High likelihood of something happening. 2. Intensifying competition. Cloud and AI. AWS is the profit engine. Azure and GCP are coming on strong, especially with AI. Risk to market share and margins is real. Medium to high likelihood of continued pressure. 3. Execution risk. Culture, innovation pace, and bureaucracy. The internal stuff. RTO backlash, bureaucracy slowing things down, could hurt talent retention and innovation speed, especially in AI. Medium likelihood of impacting competitiveness. 4. Macroeconomic downturn. Always a risk, but given the retail exposure, a deep recession would definitely hurt revenue and profits significantly. Medium likelihood depending on the economy.
Those are definitely serious. Can you paint a picture? What's a plausible negative scenario if, say, those top risks materialize?
Okay, let's game it out. Scenario 1. Significant regulatory clampdown. FTC wins big parts of its case. Amazon forced to change search rankings, limit use of seller data, maybe alter Prime significantly. EU enforces DMA strictly, hits them with fines.
What's the impact?
Impact could be margin compression in seller services and ads, slower Prime growth, higher compliance costs. Maybe knocks 15% off projected operating income growth in North American International for a few years. Likelihood, medium to high, given the current climate.
Ouch. Okay, scenario 2.
Scenario 2. AWS loses ground in cloud AI race. Azure and GCP really leverage their enterprise ties and AI strength, win more big deals, become the go-to for AI workloads. Price wars heat up.
Impact.
AWS revenue growth slows sharply, maybe into single digits. Operating margins contract a few points due to price pressure and needing massive AI investment just to keep up. Huge hit to overall Amazon profitability. Likelihood, medium. AWS is strong, but competition is fierce.
Still very damaging. Scenario 3.
Scenario 3. Internal friction hinders execution. RTO discontent, bureaucracy leads to higher attrition, especially key engineers in AML. Brain drain slows innovation. AWS feature rollout slows, retail experience lags, competitors gain an edge.
Impact.
Harder to quantify financially immediately, but it's a slow erosion of long-term competitiveness. Missed market opportunities, damaging down the road. Likelihood, medium, given the reported sentiment and difficulty changing culture at scale.
Those scenarios really bring the risks home. So how well can Amazon actually fight back or adapt to these kinds of threats?
They have serious firepower. For regulation, they have deep pockets for legal fights and lobbying. They have scale and data as leverage for potential concessions.
Lawyering up and lobbying hard.
Basically. For competition, it's relentless R&D, especially in AWS and AI custom chips, new services. Using their scale for cost advantages, aggressive pricing when needed, strategic partnerships too.
Investing their way through it.
Right. For internal execution, Jassy says he's focused on speed and cutting bureaucracy. They have HR programs, but the RTO policy seems to work against that talent retention goal, so effectiveness is debatable.
A mixed picture there.
Definitely. And for macro downturns, they lean on the low price value proposition, operational efficiency. And AWS is somewhat essential for many businesses, providing some resilience.
Okay, so weighing all that strengths, weaknesses, opportunities, and these significant threats. What's your final verdict on Amazon's overall risk level right now, April 2025?
Taking everything into account, I put their overall risk level in the moderate to high range.
Moderate to high, even with all those strengths.
Yes, because while the strengths are immense market dominance, financial health, AWS leadership, prime loyalty, the combination of intense global regulatory pressure targeting core models, fierce competition on all fronts, and those internal cultural execution challenges creates a significantly elevated risk profile compared to, say, a few years ago.
So the resilience is there, but the headwinds are stronger now.
Exactly. There's just more uncertainty around future growth and profitability due to these external and internal pressures.
What are the implications of that moderate to high risk level for the company? For investors?
It means we could likely see higher stock volatility as news breaks on regulation, competition, internal issues. There's a real possibility of slower growth or margin pressure if risks materialize.
So not necessarily smooth sailing ahead.
Probably not. Success really hinges on navigating regulation smartly, staying ahead in AI cloud, and managing the internal culture and execution effectively. Their strengths give them resilience, yes, but the weaknesses could hinder adaptation. It means the potential rewards are still high, but so are the potential pitfalls. Requires careful monitoring.
Okay, we've covered a ton. To really pull it all together, can you give us that classic SWOT analysis summary? Strengths, weaknesses, opportunities, threats for Amazon now.
Sure. The nutshell version: strengths, dominant in e-commerce cloud, AWS, powerful brand prime loyalty, strong financials profit recovery, tech leadership, AWS logistics, diversified model, scale cost advantages.
Okay. Weaknesses.
Weaknesses: complexity, bureaucracy risk, culture challenges, RTO, labor tensions, lower overall margins than pure tech peers, high capital needs, reliance on key leaders.
Opportunities.
Opportunities: huge AI potential, AWS and internal, continued cloud market growth, booming advertising business, international e-commerce growth, maturing new ventures,
Healthcare.
more operational efficiencies possible.
And threats.
Threats: intense global regulatory scrutiny, antitrust DMA, fierce competition, retail, cloud, ads, AI, macroeconomic downturns, tech disruption pace, especially AI, labor relations unionization, execution challenges at scale.
That's a great distillation. So final thoughts. Your executive summary view of Amazon in April 2025.
Final take. Amazon is still this dominant, resilient giant, impressive financial recovery driven by AWS and ads, leader in key markets, chasing AI hard, experienced management focused long-term, WT facing unprecedented regulatory threats, intense competition, and real internal challenges.
So strengths facing major headwinds.
Exactly. The market seems optimistic now, maybe sees undervaluation, but that risk profile is elevated, moderate to high. Success depends on navigating regulation, winning in AI, and managing the internal culture simultaneously.
A complex balancing act.
Very complex. They have the resources, the core advantages are powerful. But the path forward has significant risks alongside those huge opportunities. It's not a guaranteed win.
That's a fantastic nuanced summary. It really drives home how much more there is to Amazon than just the website we all use. Thank you for breaking it all down.
My pleasure. It's a fascinating company to analyze.
And thanks to all of you for joining us on this deep dive. We hope it gave you a much richer picture of Amazon today.
Absolutely. It's amazing to see that interplay, right? The retail engine, the AWF profit center, the ad growth, all now interwoven with AI while battling regulation and competition and sorting out internal stuff.
And that contrast between the market's current optimism, suggesting undervaluation, and the real elevated risks we identified. It's a compelling story.
Definitely. And maybe the final thought to leave folks with, thinking about that AI potential versus the regulatory storm. How will Amazon's actual identity and dominance change over the next decade? What factors will truly define whether they soar higher or hit serious turbulence? That's the multi-billion-dollar question we'll all be watching.